Hello everyone, welcome back to another video. In this video what we're going to discuss is how we can effectively use COT high and low. So I will just begin with describing what is COT high and low in a very brief manner, so that someone who is new is able to understand what we talk over here. So let's get the whiteboard on and let's start with what is COT high and COT low. So the first thing that we do or describe in COT high and low is, as the name suggests, if you have a candlestick like this, this is going to be very brief, so that if you want to see more of what is actually happening within a bar in terms of COT high and low, you can go and check out my previous videos. So essentially what this is whenever the market or the price is making a new high, from that point onwards to the last traded price is the delta between these two places is called COT high. That is, when this point was made at point A, when a new high was made, and if you imagine at some point within this candlestick bar the price is at this place, the delta over between at these 2 points, starting from point A, nothing before that will count. So you have to remember that. So the time from the moment from where the last high was made to the current traded price, the delta is called COT high. So all the delta prior to that will have no significance. So for example, in this bar, if this is a green bar, for example, and this is what it had done, it opened here and it went like this and closed like this. So the COT high is the delta over here between these 2 points, primarily because the high was the last thing that this candlestick did is make a new high and not a new low. So this is the delta. Okay, similarly the COT low would be the delta between the point where it made the last new low and to the current traded price. So this entire range up till here will give you COT low. Okay, so the delta between point B and point let's call this C will be COT low. Okay, so no new low has been made, so there will be no these lows or swing lows will not be counted towards calculating COT low. The COT low would be calculated from point B because this was the last time a new low was made. So having described that, let's get this off, and now let's come to the charts. Okay, so how do you effectively use it? It's absolutely like I have been saying most of the while, all the essential tools that are there in Footprint, which is these charts are really revealing in terms of volume and what is actually happening inside the bar. So what happens is, this is too much information and we get let's get to the present day first. Okay, we get too engrossed or lost when we see so many activities or so many bars with so much of data. So what we need to do is actually look into the bars which are of great significance or which can provide us with great trading opportunities. So at the end of the day, what we need is points, inflection points or confluence points where we can actually pick a trade-off. Okay, so in this zone, a lot of when we're new, in fact when I was new, I used to keep looking inside the bars and all of this. So it is actually not going to make you make any difference. You will take trades which are not supposed to be taken. So instead what we do is, when we have to use COT low or high or whenever you're looking at Footprint charts, you look at this zone as a whole, as in what has happened within this zone and which side is the market trying to actually position itself. Okay, so let's start with this day and we'll see how we can use COT high and low. So when you see the first bar, and we've been talking, how do you come to know about the bars, the big bars? Either you use the plain candlesticks when you see such a big bar. Obviously there's some buying activity that has happened there, and when you look into the Footprint, you can just go to your bar statistics and see these. You just have to see these darkish blue colors or darkish red colors, and you will see these are the bars in which there was some sort of activity which of course the retail has not caused. They in one sense they would have if their stops are hit, but again it is something that has been done on purpose and to grab some liquidity and maybe move to the other side. So for example, let's come to the opening bar. Now the opening bar is a reference and you should not actually pay too much heed into taking a trade immediately off it, because generally we've been saying this, you don't know what has happened. These are a lot of old contracts, so we want to see what is the state today. Okay, of course we take clues from the previous day. We'll come to that in a while. So the first thing that we see on this bar is that these as you can see, this is a high positive delta bar. It is opened gap up, and obviously a lot of shorts would be coming. So there are areas which are immediately of real good in the first two bars of you can immediately see these are the zones that are going to act as some sort of resistance. If the buyers that have stepped in have caused a gap up at the first place, and then caused a lot of people to get stopped out and liquidate their positions, if they are going to hold, these levels are going to hold. So these levels, you can mark them and carry them forward. So we'll just go ahead and see what happens. And these are the two bars, and the next one is the third bar. So we'll just go there and see what happened there, and so that we can get a clue. Okay, so the third one is this one, and again this is the place we can immediately see a lot of buying that has happened here, and the volume is in this zone. The market goes and takes a pullback, which is quite common. If you've been following my videos, you know this is that max delta strategy that we keep using. So this is another strategy in which you would have maybe got 1:1 or something like that, and even if you would have taken a trade here, and that is one strategy which you can go and watch in the previous video. So we're not discussing that now. Why did I just discuss all this is that we need to now see COT high and low at points which we have marked. So this is the point, and the market comes in. Now why is COT high and low important at these points is we need to know when the market starts auctioning here, what is it actually trying to do, and that we can come to know very conveniently using COT high and low. So let's get to the first bar that gets over here. Okay, so we see that the delta is minus 400. It is okay, half of the positive delta. So and the bar before that, even though it is a longish down bar, there was no delta that wasn't that high. Now have a look at the COT high. Okay, so the COT high is from the point that this candlestick made a new high, that is from here to, let's assume that there was no interruption in between, and to this last traded price. So the delta in all this was minus 332, and in the end you see the COT low is 15. So in the end the delta was lesser than or you can say less negative than the COT high was less negative than the entire delta of the bar. So that is nothing you need to be so concerned about. Now we see that some sort of liquidation break or selling, we don't know as of now, has come in the follow-up bar. We see that a COT low is high, more negative than COT high. So this is something which is not happening generally. Okay, so you see COT lows are generally higher because there is a push from down, and COT highs are generally negative because there is a push from the other side, from the upside. So obviously the COT highs will generally be negative and COT lows will generally be positive. When you see such bars wherein the COT low is negative and COT high is also negative, a lot of misconception that keeps floating around is that a lot of buyers are trapped and this is going to go down. No, it is not like that. Now if you see a COT low of a larger value, what does it mean? It means that from the time this bar made a new low to the current traded price, that is, this zone is having a lot of, I'll just mark this zone, effectively this zone is the place where there is a lot of negative delta. Okay, and although the delta for the bar is 400, but COT low is minus 181, and the COT high, if you pay attention, is only minus 31. So in this zone effectively there is very less selling pressure. All the selling pressure has come up here. So what could this mean? Either the longs that had come in have liquidated these positions, or there are shorts that are taking new positions after this low broke, because this is some sort of a candlestick pattern where this low breaks, so some new sellers step in. And let's look at the follow-up bar. Okay, it takes out these weak hands, it goes up and comes down again over here. If you see the COT low, the high is as we just said, because this has happened, so people would have stepped in. So at this, in this bar, the delta is more negative in the upper side and less negative in the lower side. So now straight away from the two bars, we can notice is in the same zone. In the first bar there were more selling activity in this zone, and in the second bar the selling activity in this zone has considerably reduced. That is, there are no fresh sellers, or there is no interest in this zone anymore, okay, in the second bar. And finally this starts happening. Now when you see all this, so you don't need to see COT highs and lows in between. You have to see at these points where you are waiting for taking a trade, and you're waiting for the market to show you some signs that it is leaning towards one side, and then you take a trade off it. Okay, now the next time when the market approaches this place is this one, and again you see the COT low. Okay, this has gone up and come down. So if you see this is acting like a proper candlestick pattern, okay, over here. So what a lot of you or a lot of us would be expecting is a breakdown like this, okay. But now if you see closely what has happened here, it is again the COT low, the entire pressure of selling is on top over here, and this place it's hardly anything, okay, again, and the bar pops up again, okay. So now once we've seen this zone, we can form an opinion how when you look at it with practice, what you'll see is when you look at this zone, you can straight away see that a lot of volume has been transacted in one area. That is, you can straight away see this is the area where there's a lot of volume transacted. In fact, you can include this also. So this zone, once the market clears this congestion zone, that is this zone, okay, once the market clears this congestion zone, you can expect the market to pop down somewhere here, and then you can take a trade on the long side, because it has proved itself in this zone that it has a lean towards the upside. Now if you don't trust your eyes, that is, you don't understand, or you see so much of activity going on, what we've learned here is that there is absolutely no interest in the lows, okay. So much so that even this zone that was first tested has not been broken. So we show that there is no interest at the lows here, and there is no selling interest absolutely at this point. Now if you don't trust your eyes, and it's difficult for you to find out the zone where we can have a retest. This retest is not just any point. There is a reason why it has come only till this point, okay. So I'll just we just discussed that part by drawing the zone. If you don't trust your eyes, the best thing you can do is, when you see a consolidation zone like this, just take the fixed range volume profile, and it will give you a much clearer picture. This is the consolidation zone, so you see straight away what is happening, and why is the market coming here and goes up. After this consolidation zone is taken out, this is another bar which is taken down. So there's a lot of belief that this is a reversal bar and it is going to break through. But once this is again started happening, and you see the COT low and high, is absolutely nothing abnormal, okay. In fact, there is a COT low is positive at this point. So from the time it made a new low to the time it closed, there is positive delta. This is hardly any number. You're not seeing any sort of selling activity here. This is a very light number. So straight away you can see, and when this happens, even a retest of this is something very similar that happened here. You can see that. So this is another zone. So you can just keep marking these zones, like this one, and then this one, the market takes a bounce of it. So you get the same thing happening again and again, and you can keep taking these opportunities. This is so common on a trend day, okay. So trend day is something like it opens it opens a gap up, the market opens gap up, and then starts consolidating in one area, and in the end it breaks out. So a sign of trending market is, if you familiar with market profile and volume profile, you'll see a profile like this, elongated, and sometimes it will be like this, P-shaped, sometimes it will be like this, wherein most of the activity in the beginning of the day, it pops up and then it consolidates like this, and at the final 1 hour or 2 hour, it again breaks out. So a profile like this is formed. So this is very common in a trend day, and on a trend day you will not see the A or a B period single print that has been formed taken out anytime. And why are they not taken out? This is the reason which we just discussed, okay. As we just saw, so there are 2 points quite similar. One is here and then another one here, and this keeps happening. So you can do this quite effectively on everyday basis, and find trades and understand how to use COT high and low and combine it with this consolidation zone, so that you don't get confused. So you can just keep testing it. Whenever you see another consolidation zone, for example this one, it breaks out over here, and when you look at this chart, okay, let's not first draw the volume profile. I will just have a look over here. Okay, now you see a lot of let me get this marker on. Okay, the lot of volumes being accumulated here. Now it takes up and it breaks down again. There is a lot of selling pressure. Most of it is here, as we can see. Then again it doesn't break, goes to our previous point that we have marked, goes up again. There's a sharp bounce, and like we just discussed, do you see where the volumes are accumulating and where all the shorts are getting trapped? This is the place. Okay, if you have a look, close look, this is the place where the shorts are getting trapped. This is another one where you can straight away see these are the bars which are of interest and which help us mark our zones. Now of course the COT low was also negative and the COT high was also negative. Again, the misconception that the buyers are trapped is absolutely wrong. What it has done is simply trap this thing was done to trap weak hands. Okay, so these sellers that were there prominently over here, and they have been present for a little time now. Okay, they come down, and what happens in the next bar is they're simply taken out. Okay, look at this negative delta and look at the follow-up. Okay, and at this point you can again see there's a negative delta. In spite of all this selling, it is still not able to take out the zone that we had from this point that we just discussed. Okay, and it moves back in a jiffy, and there's a pullback here again. This is a zone, if you look at this consolidation zone, which is really prominent, and if the market is to come to this place 19200 sometime later, we can expect a good scalp to the long side. Again, if your eyes are not tuned to this and you're not able to get properly mark the zones, we have our tool to our disposal. So we start with the consolidation zone, and we go to the point that that is of interest to us. We mark, and you see why what is happening, why this is happening within this consolidation zone, and we carry forward this zone, or you mark this zone, and whenever the market pops up, you can try it again. This is another zone, so you will see this happening throughout the day. Okay, it pops up another zone, and you see what is happening at the lows. And when you look at this chart, just a minute, I'll not get this one. What I will do is I will straight away mark. When you look at these zones, so this is one, and in this place you can see where there's a lot of activity that is happening. This one, you can see a lot of activity happening here. Again, you can carry forward this zone if you want to use the fixed range volume profile, so you can use within this consolidation zone, and you can get this. So we're almost there. Okay, so you can use these zones very effectively and help in picking off good trades on a trend day. Now this is a trend day, and a lot of you would have questions: what happens if it is a sideways day? So does this hold? So we'll just check this out. We'll take expiry, the expiry. Let's delete this, and let's go back to an expiry day and see if this works there. So this is a very good concept with COT high and low being used. So Wednesday was the last day, and we know the market was absolutely sideways the whole time. And let's get this one. Okay, this was a trend day as well. I'm sorry, Wednesday. Let's go to a sideways market. I think it was Tuesday. This is the one. Okay, so this is a sideways market most of the time until the end of the day. So this is something which we just discussed, the P profile or the elongated profile. Okay, so again, now when we come into this day, the market opens gap up, and there's something interesting that happens is it comes back to fill the gap, unlike what happened the last time. So you'd see the difference in this profile. It did not make an initiative right at the open, that is A and B did not elongate. It decided to consolidate here. Okay, so why does it come to this point? Again, there's nothing magical about it. Look at this bar, look at this delta, and look at the points which are of interest. This is one zone, you can see straight away. This is one zone. Okay, so when you just pull it forward, you'll see why it is coming to this place. If it would not have held, we would have seen a bounce of this level at least, if the market had to move up. Even if it had to move down, what we can see is one bounce here. It bounced the second time. This was an indication that the market is not ready to go down. If it was to go down, it would have come here again, taken a small bounce. So these are places where you can actually take good trades off scalps, 10-20 points, and they're really helpful. Now moving ahead, let's just a minute, delete this, and let's see that this, when it comes over here, okay, there is hardly any selling activity over here. You can straight away see over here. Now the COT low is +9 to +51 and COT high is minus this. It means that most of the selling has been happening here and not at the lows. So this is another indication that the market is not ready to move down when it comes again. So this is a place where there's a little bit more than than the previous time. There's a little bit more selling, but you can see that even at this point, there is, if you see the COT is high and the COT is low, there is absolutely nothing which the market displays or shows any sign of weakness over here. And you can straight away see with these at the lows, there is absolutely no selling coming in. Okay, so with the deltas as well, even whenever there is a high delta, there is no follow-up bar. So this is very similar to what we saw on the other chart just a few minutes back. When you go back and do your back testing, you will see when there is going to be a breakdown, it will just be if it had to break down the second time, this pop will not be there. The pop will be only till this level, till which point the COT high was really negative, and it will go down again. So you can initiate your short in terms of a continuation trade or a continuation short, or you can wait for a pullback, which we generally prefer to do, and then take a trade off it. So let me delete this again. If your eyes are not tuned, we'll just go back and get a fixed range volume profile. So this is the zone that has been consolidating for a long time, and you can see the breakout from here. So the next time when the market comes here, it pops and it gives you a good trade. So this is, again, it is a beautiful tool. You can use fixed range volume profile if you want, and you can really benefit from it. And again, another zone that you see here is this zone, this consolidation zone. So I'm sure if you draw a line, you will see some zone coming out here. So whenever the market comes there, you can take a good long, and finally the market ended like this. So hopefully this idea and this concept was of some use to you. Until next time, bye bye.